If you're wondering what your favorite stocks and the stock market is likely to do this week after the holiday weekend, then this video is for you. We have a lot of data coming out this week. Tuesday, Wednesday, and Thursday, we have PMI services and manufacturing data. This could potentially be a volatile week for the most part, but we will dive into all of the technicals and fundamentals of what's likely or potentially likely to happen. We're going to talk about Jerome Powell, the interest rate cuts. We're going to look at the VIX. We're going to look at Tesla, SPY, SoFi, Palantir, NVDA, and we're also going to take a look at a few other stocks, so stick around for those. But don't skip any part of this video because I'm going to show you a very powerful strategy on how you will be able to gauge what is almost guaranteed to happen Tuesday morning. And you're going to be able to do this Monday evening, tomorrow evening at 6 p.m. Eastern, 3 p.m. Pacific. I'm going to show you this strategy. Don't skip any part of this video because you could miss it. And I'm going to show you some strategies that we use in Discord. And this is part of the reason how we print on all of these trades that I've been sharing with you on YouTube. And of course, if you like all these strategies I show you in this video, or maybe you're confused, or maybe you just want to start making consistent income, you'll be able to use the link in the information box below to get started with Discord so that I can start helping you achieve the same results that you're seeing on the screen right now. We printed 10, 20, 30, even 40, 50, $60,000 or more on some of these trades over the past few weeks. That could be you. Let's dive into today's video right now. First things first, you have to absolutely understand the VIX and the market, the volatility, and what's likely to happen before you're even able to really invest in the market. Because if you go into the market blindsided, not understanding volatility, then you are at a major disadvantage, especially with market news. I can't tell you how many beginners that are in the market or investors that are in the market that don't understand this, that buy into a stock and don't understand why it's going down and they're losing money. They didn't realize or even comprehend the fact that there's a lot of data coming out that week or that day, and there's a lot of volatility, which causes the market to go down. Volatility goes up, the VIX goes up, the market goes down, people sell off, they panic, and they buy back in. When they buy back in, volatility drops, and so does the VIX. Technically speaking here, you want the VIX to be going down. You can see it's breaking out of this massive downtrend, which is the stock market's uptrend, because it's a mirror, basically. It goes exact opposite. It's consolidating. There is a likelihood that the VIX could skyrocket up a little bit and back down in September. September historically is never really a terrible month, but it's never really a good month. Usually as you get into October, end of September, beginning of October, things get a little bit better. Typically speaking, from the middle of October to the middle of November is usually pretty good. End of November gets a lot better. And then as you go through into December, the first 2 to 3 weeks of December up until Christmas is really good. First week of December is usually rough. So what it really looks like on the landscape of things, you got a decent September. October's pretty good. November's great. First 2 weeks, 3 weeks of December is really good, although the first week's a little rough. Second and third week are phenomenal. Last week of December is kind of hit or miss, but most times it's really good. The first 2 to 3 weeks of January are typically not good, and this is due to tax loss harvesting. We get into that in more detail as we get closer to November and December. That's typically how all of this works. So let's look at the VIX. We can see that we've got data, PMI manufacturing data, which we actually beat a couple of times. Not as strong as services data overall, but looking pretty good. The forecast right now is 48.6, previous 48. If we beat this on Tuesday, things are going to be great for the market. It's going to open up a little bit down, at least so I expect. Although the sentiment in the market is really high. So the market very well in the overnight hours on this strategy I'm going to show you real soon is likely to potentially be neutral or even higher just because of the overall sentiment of the market. Typically in a situation like this, I would expect it to consolidate and dip a little bit. But with the way the market's been, it's really hard to gauge if we'll open up lower or higher just based off of the fact that we have PMI data coming out Tuesday morning at 10 a.m. But in the pre-market is really likely that it's going to be kind of uneasy and could potentially dip. So just be expecting that. And then, of course, we have job openings on Wednesday. This date has been very skewed over the previous few months because for whatever reason, unemployment was up, but jobs added was up. There's a lot of skewed data in the job sector. And I would take this with a grain of salt. I really would. This I would not even buy into completely. I gauge the market completely different. I don't just rely on job openings. There's a lot of other strategies you can rely on, like the real estate sector, car insurance, and unemployment, jobs added, manufacturing PMI, individual analysis of companies, just job openings. This is a very tricky metric to look at in its own right. Jobs in general, job openings, jobs added, unemployment, very tricky. A lot of numbers have been skewed, so just be aware of that. Looking at Thursday, we also have data, PMI services data. Expected 50.5, 50.1 was previous. If the market sees us beat services and manufacturing and job openings this week, that is going to be very strong. If inflation gets better or drops in the second and third week of September, Jerome Powell is going to be speaking in the third week of September, and it's very likely we could get interest rate cuts. And if that happens, the stock market is going to fly in October and the rest of September. And it's going to be a banger of a finish for the rest of the year. Let's hope we can dial in and beat the data and expectations. We can see when the VIX was up during tariff talk, the market tanked. And then as it worked its way into a downtrend, which is good for the VIX, volatility was down. The market's been consistently up. I like to see the market in the position it's in now. I really like to see the VIX above 15 or even above 16. 16 to 18 is really good for the VIX, because if it gets too low, the volatility is low. The market's up. The safety is up. There's less risk, but there's less premiums. When you get up to around $25 to $30, it's a really good buying opportunity if you're buying strong stocks, because volatility's up. Put options are worth a lot. Call options are worth a lot. There's a lot of risk, a lot of money to be made if you know how to manage the risk. And so the safe medium for me, where it's balanced, good premiums, good volatility, is somewhere between 16 and 19. I really like in this area, if you know what you're doing, stocks you're trading, which I teach in Discord, you can make a lot of really good money. Once it gets up above 23 or 25, you really have to know what you're doing, or you could lose a lot of money. And if it's below 15, you'll make money, but it's not really ideal when the VIX is sitting in the $11 and $12 range. The premiums, the options are actually quite low, and it's not really worth selling put options on stocks when the stock market is at $12 or $13, unless you have a lot of money. If you have millions of dollars, then you can sell lots of put options for less money, but still make a lot of money. But when you have a lower amount of money or smaller portfolio, say $100,000, $200,000, you can't make a lot of money just on put options or call options when the VIX is below 14 or even below 13, because then the overall premiums are less, which is exactly why in GameStop, when it was getting squeezed, short squeezed, there was so much money to be made. You could sell a call option that was $20 out of the money, and you'd only have to put up your 100 shares, which cost you $2,000, and you could make like $200-$300, $20 out of the money, which is insane, because right now you couldn't even make $200 if you were $1 out of the money. And that's the difference between volatility, IV, and Vega, and how the overall market works. A lot of people have asked me to do a video on Palantir because of what's going on, and right now I'll put it in this video really briefly. Palantir is a great company. You just have to be cautious because there's a lot of pullback potential. I did tell you it would pull back to 150. It did. I've been trying to avoid this stock right now, and there's a lot of consolidation at 153, and it's really hard to say if it's going to hold here. If Palantir doesn't keep crushing earnings, doesn't generate more revenue, and their competition continues to get better, then there's going to be issues with Palantir. And right now it is looking very possible, very, very possible, we could see a pullback to 140 or lower. I don't know if this is going to for sure happen, but it looks very possible. We have to be careful because of this big sell-off and what I like to call a liquidity grab. Not quite a liquidity grab. It's not far enough down, but still, if it was a liquidity grab, it would have dipped down to like 130 and it only went to 140. But potentially, historically speaking, in the stock market, when you see these types of dips that dip back to a support level like this, it usually indicates strength, and that's a good thing. But it didn't dip far enough to show massive strength. So what we're going to do is have to be very cautious. If you were someone who doubted me and bought Palantir at 187 when I was telling everyone in the market 2-3 weeks ago, don't buy Palantir, not at this price, it's just too expensive, you just lost like $3,000 in every 100 shares. It's a lot of money. So if you had 500 shares, you lost 15 grand. Now, long term, does this matter? Probably not. In a year or two down the road, Palantir is most likely going to be $250, $300, maybe more. But realistically, 200 plus in a year or two is very, very likely. Palantir is a great company. There's no way to know for sure, but I no way would want to be buying 180. I said this. So be cautious on Palantir. I just don't think it's a great buy at this price, in my opinion. Even if it was to go to $300 or $400, I personally would risk it. Be safe. I'm not saying I don't believe in the company. I'm not saying that. It's just after this big sell-off and consolidation, there needs to be some time. We need to see another earnings call. We need to see a new update. We need to see what their competitors are doing. And we need to really see like the direction of the market, everything. Just have to be cautious because there's a lot of strength at 125 and decent amount at 140, which means the stock could trickle down into here and bounce around. And I think that's a pretty decent possibility. This stock could shoot back up to 190 and everyone's going to be saying, oh my God, it's flying. I should have bought it. But then it'll tank back down to like 120 and you'll have gotten back in and lost money. We need to see something from Palantir before I would put any money into it again, because it just dropped and it's just doing nothing now. So we need to see something. We need to hear something. We need to see growth. There needs to be something shown to us. Right now is not the time. Looking at NVDA AVTS, nothing's changed for Navitas for me, except the fact that now it's more of a buy than it ever was before. I told you guys in the mid fives to low fives is an absolute steal on the stock, and high fives is really good. And right now it looks like it's headed back to the high fours, low fives. Anywhere in this range is really good. So pretty much $4 to $6 is the buy range. If you buy at 580 and it drops to 510, who cares? Buy at 510. This is what I did on Neo. I bought at 5, then I bought at 450, then I bought at 4, then I bought at 370, then I added more at 370, then more at 370, then more at 4, and now I'm like up $60,000 in unrealized gains. This is how you dollar cost average on good stocks. This is a good stock. That's what I would do. You buy here, 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 wait. If it goes back up, start buying again, then stop. Increase, decrease, okay? As it's going down, add, wait. As it's going back up, add a little bit. And then as it runs, make money. Looking at MicroStrategy, this stock is going to follow Bitcoin, which we have a lot of data coming out this week, which is indicative of what Jerome Powell's likely to say in the third week of September, which in turn is going to efficiently move Bitcoin and MicroStrategy up. So we have to wait to see what is going on with data this week to have a likelihood and understanding of what's possibly going to happen with Jerome Powell. If data is good this week, MicroStrategy is going to work its way up towards its new updated $500 price target. So there is likely a lot of money to be made on MicroStrategy. If you have a position, you should be dollar cost averaging my 3310 rule. And of course, my AVP, D stochastics RSI, and my DFib, which I teach in the Discord. This is something that is very helpful. And MicroStrategy is very likely to run in the coming months. In fact, like I said, the price target was raised to $500. And that is, of course, in the next few months by the end of year. So there's a lot of movement for MicroStrategy. Be watching this, watching Bitcoin, and watching data. Moving along to NVIDIA, they disappointed on earnings. Not by much, but they did. And hey, I've been telling you for a long time, I've been saying it, that NVIDIA has a majority of the market share, and they're never, ever going to acquire more. When you have 90% of the market, you're not going to get 95. Competition heats up. This is just not going to happen. We got NVIDIA going down, and this is after earnings, which really wasn't that bad, but it was a $200 million miss on revenue. And of course, this did not include certain revenues overseas. I know this. There's other stuff coming up for the next earnings, which could be much better. But still, at the end of the day, I told everyone in my Discord, not a good idea to really go too heavy into NVIDIA at all over the last couple of months. We have to wait. We have to see interest rate cuts. We have to see how NVIDIA does in the next earnings. And this is a very slow growth stock at this point. It will probably accelerate more in the coming future, very near future, but it's never going to be 2021 again. It's just very hard to do that. We're in a different market. We're in a different world than we were in 2021. And right now, if you're looking for massive growth, then we're looking to robotics. We're looking to energies. You should watch my top 3 stocks to buy now for robotics and AI. Just posted that a few days ago. If you want massive growth, watch that video. Also look at Navitas and Applied Digital. These are stocks that could potentially 4 to 8x in the next 3 to 5 years or sooner. I don't think NVIDIA is going to 3 or 4x in the next year. I think it's just a little bit out of the realm of possibility or even normality. It just doesn't make much sense. AMD has a lot more growth potential if they can hit better targets, in my opinion. Like if they can grow a little bit better, more stable, increase revenue, they do have potential to grow as much or more than NVIDIA, most likely more because their price of sales is lower, which is really good. Another stock to look at is Intel. Intel is a very good stock because of the possibilities. They're an American company, of course, that builds their chips in America. They're opening up new factories in Arizona, Ohio, Oregon, and of course, under the current administration, American companies are going to benefit the absolute most, and they're building their products here. They also have Foundry, and they have a new CEO, and you can see the stock is up. I told my Discord multiple times in January, February, and March, back here to buy and constantly keep adding in the $20 range. If you did that, you're selling up here at 25, 27, or maybe you're holding. There's lots of potential growth here in Intel. And this is something that I would be adding no matter what to my portfolio. To some degree, you should have Intel because Intel is very likely to run in the coming 6 months to a year even more. It already has made a $5 move, which is about 15% or more. If we look over here, we'll see year to date is actually Intel's up 23% since I first called it out to grab it back here when it dipped to 1881. So this is a stock you want to have some position in. It's a very good stock, and there's so much growth potential going forward in the coming 6 months to a year or even 1 to 3 years down the road. One of the best stocks to buy right now, SoFi. It was up a lot. It came all the way up to 26 60, dipped back down. It built the support that I drew right here over a week and a half ago. This actually just happened this last week, and I drew this the week before. It came up, came back down, came up, came back down. Now it's going to consolidate. It's building support at $25. So it shows me that I should be selling put options 2 to 3 weeks out around $23 or $22.50 down in here, maybe a month out. So the stock does drop down to $21. I'm going to get assigned and get a much better price. If I sell put options at $22, $1.50 a month out, then my average cost is $20.50, which is down here, which is at the bottom. So you want to be selling some put options down here most likely in the coming 4 to 6 weeks, because SoFi is a very strong stock and it's going to go up even more. Most likely with interest rate cuts potentially happening in September, this is going to go up even more. SoFi price target, I told you earlier in the year when it was $10, $12, my price target was $25. We hit that already. And I said there was potential that it could hit 30, and it's very possible it could. There's plenty of time left. I would love to be adding more and more SoFi in between $20 and $22. This is my AVP range right here, which is what I teach in Discord. Again, if you're interested in learning AVP and all my technical analysis tools, the link to join Discord and get started is below. Looking at SPY, it is in an upward trend. You guys can see this upward trend, and the SPY, I told everyone at the beginning of the year, was likely to break 630 to 640 by end of summer. Did that no problem. And that 650 by end of year was very possible. It looks like that's a very real world possibility. In fact, even more on the high probability side of things because of where SPY currently sits. If we don't get interest rate cuts, it's very likely it could dip back to 635 or even 630 and then work its way back up again for the end of the year. But we have to really see what happens. That's what's really on the table right now. Interest rate cuts. We have to pay attention to this. And with all this data coming up this week, keep your eye glued to all of this data and what's going on with tariffs and geopolitical issues. All of this kind of plays into this scenario. I told you guys, and I promised you I would show you a very powerful strategy that I teach in Discord, so that you can gauge what is almost guaranteed to happen Tuesday morning in the market. And you're able to do this tomorrow afternoon, late afternoon, evening at 6 p.m. Eastern, 3 p.m. Pacific. Before we get into that, if you are looking to make the profits you see on the screen right now, like my students are doing in Discord, maybe this is confusing you and you want to start being more consistently profitable, I would love to help you. The link to get started in Discord is below. And you saw the profits on the screen that we made on XYZ, Meta, Apple, Microsoft, even Neo recently, Walmart, many of these stocks. If you want to get in on them in the dark pool data that I put out in Discord every single week with these trades, you can get started. The link to join Discord is below, but don't take my word for it. Let's take a listen to what my student Josh had to say. What stood out to you the most when you originally signed up for the Discord and the coaching really gave you the incentive to want to join? And do you still feel the same way now? And what would your message be to others that are, in the same situation?
You were more focused on like the actual strategy of things as opposed to, pushing a particular stock or trying to like almost trick people into like how they can get rich. I'm also a masterclass student as well. And that's where I really took things to the next level. For anyone who's thinking about joining, is anyone can do this. It's just really like putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really, really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
So you heard my student Josh had to say, if you want this to be your success story or something similar, I would love to help you. The link to join Discord is below. Remember, don't put off anything. Take action right now so that tomorrow is better and so that we can aim to achieve your goals. Don't need to procrastinate. Need to jump in and take action right now. I look forward to helping you and seeing you real soon in the Discord. So this strategy that I'm about to show you is very easy. We're going to look at the MES. Actually, we're going to leave SPY open here. We're going to go over to the MES. You're looking for the micro E-mini S&P 500 futures. And whatever happens at 6 p.m. Eastern time, typically on Sunday nights, but it's this week, it's going to be on Monday night, is almost guaranteed what's going to transpire on Tuesday morning or typically Monday morning. If this gaps up, then we're going to have a jump in the market in the pre-market Tuesday morning. If it drops down and gaps down like this, then we're going to have a bearish market in the opening. And if it drops down, the median becomes the resistance as it comes back up. If it jumps up, the median becomes the support, and it could go up even higher. And this is pretty indicative of what the market is likely to do, because I'm going to show you a particular point in the market back on May 12th. And I'm going to show you exactly what the MES did in the overnight hours. You can see that right here on Sunday, May the 11th, it gapped up. When we go back to Google on May 11th, May 12th, you can see right here, it gapped up. See, exactly like the MES. This predicted it, pre-market hours. When we go look at the SPY and we look at the exact same time frame and we look at May 12th, you will see the exact same thing happened. And this happened right here, May 12th. SPY jumped up. Every stock in the stock market for the most part did this, pretty much because this is indicative of what's happening in the overnight hours. Remember, the stock market in China opens up at 8 p.m. Eastern time, and in Japan it opens up at 9. Actually, I think I got them backwards, 8 and 9 p.m. respectively. And then, of course, Europe and London at 2 a.m. Eastern. So this is a very powerful strategy for you to gauge what is likely to happen in the market and to be able to do this much earlier than market hours, like in the overnight hours. It's very powerful. This is a great way for you to gauge what is almost surely to happen in the market Tuesday morning. And you're able to do this tomorrow night, in the evening, and overnight hours. It's very powerful. It'll help you gauge the market. And once you get used to doing this every day and every week in the overnight hours, the MES will help you greatly. It's just one of the many strategies that I teach in Discord. I look forward to seeing you in the next video and in the Discord real soon so I can help you grow your portfolio. One love, fam, and I'll see you soon.